Real Estate Edge with Jimmy Singh, where we provide information and answer to you as an investor, you as a first-time home buyer, and in fact, you as a renter going into the real estate market. Jimmy, today's question is relevant to the same question or the answer you have provided in terms of this booming real estate market, how to get into the market, what are the costs, what are the benefits of that too. So today, most of the folks are asking question, what would be a strategy as an investor to get into this high market? Also, how to really find the funding for it?
Sure. So, first thing, guys, you have to understand is, as an investor, what is your risk tolerance? It is very critical because you should be able to sleep good at night. For me, when I invest, I don't look at the short-term nuisance in the market. So for my strategy, it is irrelevant what is happening in next 6 months, 1 year, because most of my properties I bought for long-term horizon, 15 to 20 years, right? And at the same token, you have to know, are you an active investor or are you a passive investor?
Okay.
Meaning, let's say you want to just invest in a newer project, like a condominium project, which closes in 5 years.
Okay.
So all you have to do is just write checks and let the property finish in 6 years.
Yeah.
So that is more like a passive investment.
Okay.
And the active investment is you buy a property, maybe rent the top and the bottom, and you might be involved on daily basis with management. So that is more like a hands-on active property management.
Okay.
Right? So the good part, folks, in real estate is, it is the, in my opinion, the best wealth creator on the planet. And they said the real estate has created more millionaires than anything else.
Yeah.
I'm sure, if somebody is in cryptocurrency, in technology, they are billionaires. But for ordinary folks like me and you, I think real estate is providing the shelter and the future wealth opportunity, right? So real estate does 4 things which are very powerful. Number 1 thing is, historically, properties have risen in Greater Toronto area 6.5% per annually. So appreciation is one angle, one component.
Yeah.
Second component is your mortgage pay down. So once you have a rental property, your tenant will diligently keep paying your principal or mortgage for next 20 years. Hence the property will be paid off, creating cash flow for your retirement, right? And third thing is, it can create tax write-offs. So again, for a lot of wealthy people, they buy real estate, and even the mortgage interest is higher. They can write off all the interest, capital improvements, carrying costs, property management against the income to bring the income bracket down. So there are a lot of strategies, wealth creation strategies. You are most welcome to talk to your accountant and lawyer to understand how it will benefit your particular situation. But all in all, here is the strategy I use myself, and I took the strategy, actually it's not my strategy, I took from Warren Buffett, what he's doing with the stock market. So what Warren Buffett does pretty much is, he acquire a company majority, voting shares. Basically, he keep buying stocks. Once he have majority shares, then he control the cash flow and use the cash flow to acquire other assets. So same thing as an investor, I have a game plan that, number 1, I want to acquire a property. Second thing is, after a few years, I want to refinance, pull up my initial 20%, and then take the 20% and buy another assets. So in real estate, if you hold for long term and you free up your equity, you double your assets. So that is very, very critical. It's kind of a velocity of money. You make the money work harder for you. Right? That is the strategy any investor should have, because everybody has limited resources. You might put 20% down on one property, might for 2, might for 3. But if you want to have a goal of 5 to 6 properties, I think using house as a leverage is a very good thing. And another question you ask me, how people fund these transactions.
Right.
So obviously the easiest part is, if you work hard, you have some savings sitting in your RSP or high savings account. With current inflation, you can tap on that savings, put 20% down and buy your property. If you're a first time buyer, you can definitely take advantage, buy with 10% down, 5% down. Second thing I see mostly people leverage is home equity line of credit. Some banks, when you get a mortgage, they have some sort of built-in line of credit. As you keep paying down the principal You can borrow that money and invest somewhere.
Yeah.
Third thing is what we call again home equity mortgages.
Yeah.
So the difference point is instead of line of credit, you take second, third mortgage against your property from a different lender. It might be a little bit more interest, but you can tap into equity. For example, if somebody is on disability or somebody lost the job, he's retired. For those sort of people, refinancing won't work because banks look at your income and they don't have any income. So for the customers who don't have any income but they're sitting on a house which is paid off or with very little mortgage balance, but they want to participate in investment. So what they do is they can give me a call. We can hook up with a good experienced mortgage broker. So we can have a second mortgage or a third mortgage. You can tap that money, invest for maybe 7-8 years. Yes, you have a carrying cost of interest, but your property should be able to cash flow to cover all those expenses. Or you can have a short-term strategy that I can buy a pre-construction house or a condo for 4 or 5 years, then sell it, pay off my line of credit, and move to the next property. Right? So this is the third one. Obviously, you can also have a joint venture with your friends and family. So if you have 10%, your friend has 10%, you can join forces, go to a lawyer, get a joint venture agreement done, and you can participate in our booming real estate market. So those are all the funding ways where people can acquire, right? And I can't reinforce and emphasize the team you guys work with. So before you start investing, folks, you have to build a team of professionals who have experience navigating the crazy market. They can be lawyer, they can be accountant, they can be a real estate expert. But as such, like I don't see real estate as a risky investment. The only risk is the people you're working with. So if they don't know how to handle, they don't know the landlord tenant issues, how to mitigate that, or how to leverage properly, that is the biggest risk. So before you hire anybody, ask them, interview them, what experience do they have personally acquiring real estate, and if you have any question, they should be able to answer. And personally, if somebody want to take the next step and buy property, we actually have a one-on-one Zoom call or personal meeting where we can discuss what are the better markets for your budget, what are the property types, and then what is the appropriate funding as well, because funding is also very critical. And then we do analysis, we do negotiation on your behalf, and when we close that transaction, we find the tenants as well. So that is something, guys, you have to keep in mind. And obviously, there's a big difference between investing and speculating. Yes, the boom has made a lot of people jump into the real estate business, without thinking the drawbacks, and then that is the main risk, because they're looking for short-term money in 6 months and 1 year. Market can switch on them, and they might end up selling at slower market. So that is the risk.
Folks, you must have actually got the idea of it when speaking to an experienced broker, just like Jimmy's saying, broker of Supermax Realty, about 17 years in experience. He actually jotted down how really to get the funding, where to get started, whether it's condo, whether it's home, and how to see that in longer term. Keep watching, keep sharing, keep subscribing, and keep asking us questions on Real Estate Edge with Jimmy Singh.